What does buying down your interest rate even mean? You probably get told from a lender, hey, do you want to buy down your interest rate? Well, most of the time you don't even know what that is. So today, that's what we're going to go over. We're going to go over buying down interest rates, the strategy behind it, and when you should buy down your rate. Hi guys, my name is Andrew Augustiniak from the Augustiniak Lending Team. And today we're going to go over one of the most common questions that I get on a daily basis is Andrew, what is my rate and can I buy it down? Should I buy it down? The reality is you have to look at a mortgage as a financial tool to acquire this asset, whether you're buying your first home, your second home, an investment property. This mortgage is a financial tool and you must structure the mortgage accordingly to your financial goals with that house. That's why it's so important to use a team, a mortgage consultant, and not the 9-to-5 bank that you just have somebody who doesn't even own a house behind the phone or the table. But people who work in banks or call centers, usually those are just individuals who are just there 9-to-5 and they don't even understand how to structure a mortgage themselves. So it's important to use a team, hopefully use our team that does loans in 45 different states. You guys can find my information up in my profile, and usually if you text or call me, I'm probably going to pick up. Now, going back to buying down points. Buying down points, what does that mean first and foremost? Buying down points means that I, as a home buyer or refinancer or whoever that is, I'm going to put more money down. I'm going to buy, aka cost. There's a cost to doing it. I'm going to put more money in up front for a long-term savings down the road. So, for example, let's say for this borrower. Now keep in mind, rates for every borrower are different, meaning the rates for John down the street with a 600 credit score are going to be substantially different for Sally with an 800 credit score putting 25% down, okay? But let's say the no cost rate, that's called a par rate, okay? If you ever want to ask what the par rate is, the no additional cost rate, that's your par rate. Let's say the par rate today was 6.99 for example purposes, okay? Buying down the rate might mean for a 6.49% rate, that every day it's a little bit different, could be a certain percentage. Let's say on a $400,000 loan, to buy down your rate 0.5%, that may cost a 1% charge of the loan amount. Let's say your loan is $400,000. That 0.5% may cost $4,000, which means you are bringing $4,000 more to the table, to the closing table, to the refinance table, whatever that may be, to save a 0.5% on your interest rate for the next 30 years. Okay, and that could save on a $400,000 loan. Let's say that saves $170. You're bringing $4,000 up front to save $170 a month for example purposes. Now, let's do the quick math. If I'm bringing $4,000 up front, this is where the strategy comes in, because everybody should not buy down your interest rate depending on your belief system. And this is where I usually ask my clients on a buyer consult, what is your belief system? Because I'm going to give them a buy down option, a no buy down option, and then I'm going to give them a higher rate option that gives them money back. And I'm going to tell you why I do that. But let's say, because a lot of people say, well, should I do that extra $4,000 to save $170 a month? Well, let's see, what's our break even? If I'm bringing $4,000 more dollars to the table to save $170 a month, that means it's going to take me 23.5 payments for that $170 savings to equate to the upfront investment. So that equates to 1.9 years. Let's just round up and say 2. On that particular scenario, that means I have what's called a 2-year break even. That $4,000 investment is going to save me $170 a month, and I'm basically that savings is going to equal $4,000 in 2 years. That means from after 2 years, I'm going to be saving a lot more money for the rest of that loan term. Now, should you do it? Should you not do it? The answer is, when do you think rates are going to go down? How fast? How long do you think you're going to be in this house? Because I can tell you, if you think, I might move in a year, and if you do move within that 2-year time period, you have now lost money because you have not even reached your break-even point, okay? Does that make sense? If you think rates are going to go down within the next 2 years, in this scenario, everybody's scenario is different. If you think rates are going to go down within the next 2 years, you should not buy down your interest rate. You should let the market work itself out, and then you can refinance when that time comes. Let the rates go down, and then you take advantage of that rate. But it's all based around your break even. Now, on the opposite side, you don't have to always buy down your rate. Sometimes you can take a higher interest rate, meaning you pay a little bit more monthly to get a credit back. The opposite of a buy down is a lender credit to apply toward closing costs. The strategy here is reducing your cash out of pocket to pay as little amount of fees on that loan as possible, because then if rates go down within the next year or two, then you are also winning. That you didn't pay an absorbent amount of fees or lending fees or title fees or all that stuff to acquire the asset. You just put money into the house as a down payment. So long story short, should you buy down your rate or should you not depends on your situation, your break even, and your long-term strategy and belief system. But understand that there are multiple different options. You can buy down your rate. You can take a no-cost rate, meaning there's no extra buy down. You're just paying your normal lending fees, title fees, insurance, home warranty, whatever other third-party fees that you have specific to your property that you're purchasing. Or you can even take what's called a lender credit to apply toward your closing costs and take a slightly higher payment and just pay a little bit more monthly. All those options are on the table. If your lender doesn't present all those options, then we should probably talk, but you'll find my information in the profile. Shoot me a text, shoot me an email. I'm happy to help. We do loans in 45 different states. My name's Andrew Augustiniak with the Augustiniak Lending Team, and I will catch you guys next time.